Welcome back, everyone, to another market review. And this one is actually going to be a little bit of a different one, and it's going to be for Japanese yen for the ICT Silver Bullet session from 10 to 11 in the morning. And the reason for me choosing Japanese yen instead of trading NASDAQ or any other type of asset was really I noticed how it moved pretty well going into the day. It was actually pretty well divergent because, usually when we're trading NASDAQ, ideally we want to see NASDAQ, trading in the opposite direction of dollar. And not only that, with NFP days, usually equity indices for US markets aren't going to be as clean as we usually get. And I noticed that really Japanese yen has a really clean market structure on days like these. So I wanted to really share that with you guys and show you how you can get really clean setups on days like NFP day or things like that. So here we are on the daily chart for Japanese yen dollar. And really the only thing going into this day specifically that I had was price was drawing towards this main daily buy side liquidity. And other than this draw, I was looking at to see price really respect this bullish order block on the daily because we have two down close candles being engulfed by these two up close candles. We see price trade back into it, taking sell side liquidity right here, and then we trade higher. And not only that, we see how sort of right here you have a little bit of equal highs. Retail is going to have their buy stops above here, trying to sell, sell, sell. And then after that, market makers practically kill buy stops all above this right here. And that's everything that I have for the daily chart. So jumping into the 15-minute chart, really these were the levels that I had. It was simply just these really clean highs because remember, we're trading that ICT Silver Bullet session. As you can see, I have it on from that 10 to 11 session. But really, this is the main draw that I was looking for in bias with the daily buy side liquidity that we also marked. And then I have this 15-minute daily BISI that I was also looking at as well. And key note, remember, like I always say, we're below midnight opening price, which is perfect. And we're taking liquidity against the direction that we want. We also had a market maker buy model. I'm going to show you guys that in a second. But really, you could see how price during this, we faked everyone during the NFP news, stop hunt everyone here trying to buy up all these orders, chasing it. And then we reverse, almost like a Judas swing, if you want to say that. Alrighty, so we're going to drop to the 1 minute and see how I would have framed the setup for this day. So remember we talked about how this being our first main draw, as these are really clean highs, buy stops are going to be above there. And then we have coupled that with the daily buy side liquidity as well. And remember, this blue blocks is that 15-minute BISI that we talked about earlier. And as we can see here, remember the New York market open at that 8:30, we jump up. Everyone here is trying to chase this buy going long for the NFP release. And what are they going to do? They're going to be trailing their stop losses, chasing this buy here, here, and here. And we see price taking liquidity leading up to that session, which is what we want in the contrary direction. So we're taking liquidity, taking liquidity, taking liquidity. And not only that, this is a market maker buy model. And as we can see here, if you draw your consolidation boxes, it's very, very well evident that what price is simply doing is having a market maker X model, as ICT likes to call it. So you see all these consolidations leading up to that session, but it's just consolidation, consolidation, consolidation. So really, if you combine time, price, and really utilize those ICT concepts, you can really get some really nice setups that we had if you weren't able to catch, let's say, NASDAQ, for example, today. So looking at this a little further, we also had the macro at 950, but remember, we're specifically talking about this. But just before we get to that ICT silver bullet, I want to analyze this to show you guys that first we had an inverted fair value gap in here as price completely disrespects those bearish PD arrays and trades back up into it here and here. We then also create a bullish breaker because as we can see here, low, high, lower low, higher high, and we tap right back into that bullish breaker right here. Because really, it's actually supposed to be the entire, if on a larger time frame, it would just be the entire thing. You could think about it that way as well. But just to keep the charts clean, I just have it like that so you guys can see. And we're not quite above the 10 a.m. opening price, which is a good thing. Like I said, you want to, if you're able to get double discounts, like I always talk about, being below the midnight open and also being below, let's say, power of 3 for the 10 a.m. open. And we're not really above that much. It's only by 0.04, 0.03%, which is perfect. And then we see price again, we're displacing perfectly, almost like that train example that I always talk about. And then we have this inverted fair value gap right here. Price trades up into this. Remember, wicks are also gaps. You draw that out. Look at how price respects both the wick and the inverted fair value gap. Look at the consequent encroachment of both. Perfectly, price is respecting that there. And then after that, we're going to have this order block here as price displaces higher. These two down close candles were engulfed by these two up close candles, and we see price respect that twice. And another main draw that I actually forgot to mention here was these also, you have these equal highs here. So if you draw this out on your chart, and you can see there's really clean highs, retail selling here early, and here early. So we completely blast through that. We have equal highs here, that being as a potential first or second draw. And then, like I said, your final first two draws are these two up here. But again, you could also take partials or move stop losses once you pass these, this one, and then your last one here before reaching that final terminus all the way up there. So continuing to tape read this, we also have to remember that with breakaway gaps, especially if you want to see bullish order flow, it's important you want to see those type of breakaway gaps. We had one down here as well, and these two here's, but in specific to our session here, we have this one here. Price trades up, respects this bullish PD array, this fair value gap. Look at the bodies respecting that the consequent encroachment of the fair value gap. That's what you want to see when you're looking at bullish order flow and price. And then once again, we blast through it. Low resistance liquidity environment in all this, so it's able to move rather quickly. Again, what's going to happen above these highs up here? Buy stops. What do we do again? Volume imbalance in here, another breakaway gap, tap into it, trade up again. And after trading up into it, we realize again, there's a bearish order block here. But again, why would you be selling here when that main draw is all the way up here with buy stops above here? So what do? Tap into consequent encroachment of this large BISI here. And then after that, we trade upward once more, tagging into buy stops in here. So remember, wicks are gaps. You draw that out. Look at the bodies respecting the consequent encroachment of it. And right at 11 o'clock, look at how price completely slams through and reaches that first main initial target that we had. It wasn't able to reach that daily buy side that we had. But again, if you're able to frame this properly, even those of you who don't trade the silver bullet, you might be trading macros, and you got in during that macro, you're looking at least a 1.3% movement in the direction. So on days like, where it's like NFP day, or you had a Labor Day weekend and you're looking for a little bit cleaner price action, and where, let's say, DXY is not moving in divergence with NASDAQ, you can head over to Japanese yen or any other currency. I like the Japanese yen just because it's a little bit more volatile, and you could trade these currencies rather than the indexes just because they're going to be a little nicer to trade with. And jumping into DXY, I'm going to be showing you guys what I was looking for today specifically. I mentioned this in my NASDAQ video. That was the previous video that I uploaded before this one. I was looking to go bullish, possibly within this inverted fair value gap. If you guys draw this out, as you can see here, price is respecting the consequent encroachment of it. So if we draw out the middle line, look at how price is respecting that perfectly. And you also have a new day opening gap right in here. It's a little bit small, but if you draw it out, you'll see here the close and opening of that candle is the new day opening gap of price. And lastly, we also have a bullish order block. I drew out the 50% of that, as you can see right here, and we see price tag into that as well, being a possible potential reversal point for price. And here we are on the 1 minute here, and I'm going to show you why it was a lot better to trade really currencies today rather than the indexes. So as we can see here, during that ICT silver bullet model, dollar is going to be above midnight open, indicating we are in a premium, and we're also above the 10 a.m. opening price just a little bit after the session opens, and we have bearish order flow. So it's really basic analyzation, as we can see here: high, low, higher, high, lower, low. So already we have a bearish breaker on price. And look at how price respects this bearish breaker right into the consequent encroachment of it, and we trade lower. And then after that, we can see price continuing to respect bearish PD arrays. So throughout this entire movement downward, we're seeing price continuously respect bearish PD arrays. Look at that. And then we begin to displace down lower and lower till finally at that 11 o'clock, we get really deep into that midnight open overall. But in relation to what we talked about earlier, we see DXY tap into the consequent encroachment of the order block, sending price higher. So again, this was very ideal, as again, they manipulate first downward, go up, take out buy stops, and they already took out sell stops. So they're going to perform that Judas swing. And that's what we want to see, because that'll mean yen, as long as it's moving in a divergence direction, that'll provide yen more liquidity, because it's taking liquidity in the opposing direction. So that way, when dollar falls, yen will go up. Now, if you guys look at your charts for NASDAQ as well, and you'll see that they're both going down. And 9 times out of 10, usually you want to have the most probability. It's better to trade them when they're diverging with each other. When they move together with one another usually doesn't provide for the cleanest price action, and it can provide for some stop losses and things like that. So it's better to put yourself in a better situation by trading, for example, currencies on a day like this, rather than trading the US indexes. So again, I hope this video was insightful to all of you guys. Please feel free to comment down below if you guys have any questions, and I'll catch you guys in the next market review. Peace.